How the future of COVID-19 is estimated to make or break Dow Jones stock. The stock market's rally back to all-time highs might not have been possible without optimism over a COVID-19 vaccine. And that means progress and setbacks towards that goal could continue to drive the market in the weeks and months ahead. Here's how the future of COVID-19 is estimated to make or break Dow Jones stock. Welcome to Trending's Finest, where we give you the hottest updates on the world's most viral news, videos, and stories in the most exciting format. Click that subscribe button and hit the notification bell to not miss a single beat of the world's pulse. The Dow Jones Industrial Average surged 378.13 points, or 1.4%, to end at 28,308.46, finishing above 28,000 for the first time in 6 months and only 4.2% away from its February 2nd record closing high. That means this year's bear market, or a drop of more than 20% from a peak from the February high to the lows on March 23rd, was the shortest in history, according to S&P Dow Jones Indices. Today, we find out how the future of COVID-19 is closely tied to the future of your favorite Dow Jones stocks. Also, we tell you the more pressing concerns that smart investors like you should really watch out for in the coming months. Stay tuned. How does COVID-19 affect the Dow Jones? Here's what the experts say. Tracing back to the beginning of the wide-scale outbreak in March, the market reacted to the recent unpredictability with large drops. This triggered a market-wide circuit breaker 4 times in March. The safeguard pauses trading for 15 minutes in hopes the market will calm. To really bring it home, the books say that the coronavirus created such uncertainty around the world that 2 of the largest single-day drops in the Dow Jones Industrial Average have been from March of 2020. More recently, analysts at UBS rolled back the market tape to look at how stocks have reacted to positive and negative vaccine-related news since the coronavirus pandemic hit. They concluded that optimism around vaccine developments added around 6.5 percentage points to the S&P 500's return since May. Case in point, U.S. stocks jumped on Monday amid new optimism that a near-term coronavirus treatment and cooling U.S.-China relations. The market's sensitivity to news on the treatment front in general was on display Monday, with the S&P 500 climbing to another all-time high as global equities rallied following the U.S. Food and Drug Administration's approval of convalescent plasma, the antibody-rich blood component harvested from people who've recovered from COVID-19 for emergency use. The method hasn't been proven effective against the virus in clinical trials, but follows calls from President Donald Trump to fast-track treatment approvals. In coronavirus vaccine news, the Financial Times reported Sunday that the White House is mulling an emergency use authorization for AstraZeneca's experimental drug. Such an action would bypass regulatory standards and potentially introduce a vaccine to the U.S. market before November's presidential election. Meanwhile, it might be small and mid-cap stocks that would stand to benefit most from a vaccine breakthrough. The UBS analysts noted that small caps outperformed large caps by around 2 percentage points on days when there was major vaccine news. If market participants currently see a 33% to 40% probability priced in for a vaccine, potential outperformance for small versus large cap stocks stands at around 13 percentage points or more, they said. What's next for the stock market? Find out in the continuation of our video, including the real game-changer news in the months to come. Keep watching. Stocks could be poised for more gains in the coming months, analysts say. One key reason, investors are betting that the pandemic will end eventually with a vaccine, and large rallies are usually followed by continued gains, analysts say. The S&P 500 has averaged a 46% return in the 12 months following the start of a new bull market, according to research from CFRA, which analyzed data going back to 1932. But any setback in the timeline for developing a vaccine could challenge the stock market's rebound, experts caution. With the U.S. presidential election less than 3 months away, some investors remain cautious due to economic policy uncertainty. Renewed trade tensions between the U.S. and China have added to those concerns after both countries reached a deal in January that brought a truce in a tariff war. Some market professionals worry that a stalling U.S. recovery could slow the rally. Investors hope for another coronavirus rescue package from Congress to help sustain the economic rebound. But talks among Republicans and Democrats hit a stalemate this month. Even so, some investors are looking past those risks. Many businesses have failed, and there's been a lot of permanent damage, says Thomas Martin, Senior Portfolio Manager at Globalt Investments. But once there's a vaccine, we would limit that damage and the economy could be resilient. S&P Global Ratings acknowledges a high degree of uncertainty about the evolution of the coronavirus pandemic. The consensus among health experts is that the pandemic may now be at or near its peak in some regions, but will remain a threat until a vaccine or effective treatment is widely available, which may not occur until the second half of 2021. Above the news about the vaccine, there are more pressing concerns that investors should be monitoring. Analysts and investors have pointed to optimism over a vaccine as insulating the market from disappointment on other fronts, including the inability of congressional Democrats and Republicans and the White House to come up with a plan for another round of coronavirus aid. Economists warned that concerns about the economic damage caused by the pandemic could overshadow those hopes. Gregory Dow, chief U.S. economist at Oxford Economics, declared last week that long-term optimism regarding a vaccine is secondary to near-term economic and health concerns. A jobs deficit of 13 million relative to pre-COVID, states facing budget crisis, and still more than 50,000 daily COVID-19 infections. There's also been a relieving reprieve from rising tensions between the U.S. and China. Bloomberg reported Sunday night that the White House had reassured companies they can continue doing business with Tencent-owned WeChat in China even after the app is banned in the U.S. Senior officials in the administration reportedly realized that a blanket ban would have a major impact on the tech, communications, and gaming industries, among others, according to Bloomberg. Considering all these concerns for the Dow Jones, what's been your go-to advice for your investments these past weeks? Tell us in the comments down below so we can compare notes. Find out more about the recent crackdown on Chinese tech companies in our other video that goes over the ticking time bomb on video-sharing social networking service TikTok as U.S. President Trump declares its ban in the United States. Find out how this presidential move impacts the world, your tech, and most importantly, you. In our video, the end of TikTok is going to be more devastating to its users than Vine. Here's how. Thank you for watching. This is Trending's Finest. Always the trendiest, always the finest.